Volatility is back in the markets here over the last few days on a 6-day losing streak. We'll see if today the Dow's able to snap that. We've got the Jerome Powell press conference coming up. That's going to be this afternoon, 12:15 our time here on KCMO Talk Radio, 95.7 FM. But what does this mean? What are we seeing over the last few days? Taylor Riggs is here, Fox Business Network, co-anchor of the Big Money Show, 12 o'clock on KCMO. Taylor, good morning. Thanks for joining us. So the volatility is back. What exactly are we seeing and why?
Yeah, so it has been a wild ride in the last week. And really, it started about a week ago when we got much hotter than expected inflation data. So we had hot inflation in January and in February. And we kept thinking, and frankly, the markets were thinking, it's an anomaly, it's a one-off, it's a two-off. Inflation will continue to fall down to its 2% level. Well, the problem is a week ago, we got those inflation numbers. And they are re-accelerating once again, really proving that inflation continues to be such a problem for the American people. The markets were frankly really, really caught off guard. That's why you had a few days last week when you had a pretty major sell-off. We are now thinking, and you mentioned Jay Powell's speech, that we may not get as many rate cuts this year. If inflation is hot, the economy is reaccelerating, demand is reaccelerating, prices are reaccelerating, we're going to have to keep rates higher for longer. The equity markets, as you can see, did not like that at all. So I think a lot of people were frankly caught off guard that all of these rate hikes so far hasn't necessarily worked in 100% the way we thought it would.
And you're right to note, I think, on the rate cuts not happening. And in large part, have the markets, or did the markets in recent months, in part, bake into rate cuts into their 2024 expectations? And are they reeling based on a realization those are not coming?
100%. So when we came into the year, I think the markets were too optimistic. They had priced in 6 or 7 rate cuts. That is just crazy. The Federal Reserve, and you mentioned Jay Powell, kept trying to tell us maybe 3 rate cuts at the most. The markets thought, no, we'll get 6. We'll rally on that news. Cuts are coming. Everything's going to be great. Then the market thought, okay, maybe not 6 by March. Maybe we'll get 3 or 4. Then when we got that inflation data last week that was really hot, the markets thought, oh my gosh, we may only get 2, we may only get 1, we may get 0 rate cuts. So I think we went through a period last week when the markets are calibrating how quickly the Federal Reserve is going to cut. And dare I say it, I'll go out on a limb, if they cut at all. Now, the Federal Reserve will continue to tell us they likely see 2 or 3 rate cuts. But I'm hearing from a lot of people, what if we don't get any cuts? If this economy is so hot and inflation is hot, is the probability of a rate hike 100% off the table? Now, I don't think a rate hike is in the cards, but I don't think that it's a 0% probability anymore. So I think the markets are really trying to figure out how sticky this inflation is, how the Federal Reserve is thinking about this, and we're going to be getting a lot fewer cuts than we thought.
So what do you expect? Taylor Riggs is with us here on KCMO Talk Radio, co-anchor of the Big Money Show, 12 o'clock Central on Fox Business. What do you think Jerome Powell is going to say today, either way, that's going to tip the markets either positively or negatively?
I need to hear him talk about inflation and what it means for his path forward. Now, he will likely not signal to the markets. He'll continue to say last week's inflation print was, again, one data point that we're looking at. I think the problem is we had January, February, and now March. So those are now 3 data points that you can't just brush off and say it's an anomaly, it's a one-off. So I think he really needs to come out and tell us what January, February, and March hotter than expected inflation means for him, means for the Federal Reserve, and again, sort of how they're putting that one data point into a context of all the other things. A lot of the other things that we've been looking at, frankly, are also reaccelerating. The economy looks good. The labor market has not slowed down. You have a lot of demand. I was taking a look at Bank of America credit card spending. It's reaccelerating. Incomes are reaccelerating. So he's in a really tight spot. I really want to hear him, and I think the markets want to hear how he's thinking about inflation and these rate cuts and put back into perspective for us. Are you still looking at 2 cuts for the year? Is it 3? Is it 1? Is it 0? How is he thinking about all of this? I think the markets repriced last week. They're now pricing in about 2 cuts for the year. So if the Federal Reserve says about 2, that likely is baked into where we are today. If it's anything substantially different from that, I think the markets are going to have to recalibrate once again based on the comments that he makes.
And I know the Fed cannot, it is in no way political, or it should not be political, but how much should they be thinking about, gosh, if we do a rate cut in the end of third quarter, early fourth quarter, that it will perceived as highly political?
It's 100% something that they need to be thinking about, which is why when we're playing the guessing game of when we're going to get the rate hikes, a lot of people think that September is off the table completely because it's right before the election. Now, there is a November meeting that is 2 days after the election. They could cut then, but that's why people have said, I think a June rate cut is off the table because the data is too hot. You could get July, and then you could get either November after the election or December. A lot of people are looking at December. But the September meeting, even July and September, you're now coming in so close to the election that even the Federal Reserve says that they're independent. And I actually believe for the most part, they want that. They want to maintain that credibility. They have to be very careful in an election year. July they could get away with, but I think a lot of people are assuming September they will not move because it is just too close to the election, and you don't want to look at stimulating the economy right as people are going to the polls.
Yeah, that's a great point. Taylor Riggs, we'll be watching.
When the economy is the big issue that people are voting on.
Yeah, and we'll be watching. I guess that speech will be during your show today on Fox Business. So we'll be watching, we'll be following, and we appreciate the insight here in Kansas City.
Of course. Happy trading. Good luck.
All right. Taylor Riggs, well said there on KCMO Talk Radio.